Hello everyone, today I'm going to be speaking with you on ways you can pay up your mortgage faster. A mortgage is a loan, even though a couple of people fail to realize it. People are so much in a hurry to own their own homes, and the advantage of most Western countries is that you can actually own your home by securing a mortgage. But mortgage is actually a loan that needs to be paid off. So there are ways that you can actually pay off your mortgage faster so that you can be debt free, own your own home without any debt, and you can also use that money for other things. So the first way you're going to be discussing is like by increasing your monthly payment, right? So I don't know if your schedule is monthly or bi-weekly, but assumably it is monthly and you're paying about 950, you may want to increase it by a little bit, maybe by $50, even $10. If you increase it, it goes a long way in helping you pay your mortgage faster and become debt free, right? So you may want to just add few bucks, but whatever you're going to do, you need to confirm with your lender that is going to be penalty free. You want to know that if you increase your monthly payments, that you're not doing it at some cost. That would be counterproductive. It won't be useful at all. Another way you can reduce your you can pay off your mortgage faster and reduce the loan you're owing on your mortgage is by paying structuring your payment plan to be bi-weekly as opposed to monthly. So when you're paying stuff monthly in a year, there's only 12 months, so it means you're making 12 payments. But if you do it bi-weekly, you're paying 26 times. Yeah, some people don't know that bi-weekly does not necessarily mean twice a month. If you're saying twice a month, that would be 24 payments in a year, but bi-weekly actually translates to 26 payments in a year, not 24 payments, right? It's not times 2 of 12. That's because of the differences in the number of days in each month, right? So you'll be taking advantage of those months that have a higher number and a shorter length number, that kind of thing, by paying bi-weekly. So bi-weekly actually helps you pay up your mortgage faster because the amount I'll be going to the principal is more compared to if you were paying monthly. Another way you can actually pay off your mortgage faster is by taking advantage of the prepayment loan. So for every mortgage, there's an allowance of paying a lump sum payment, right? Depending on how much your down payment was. So if you pay between 5 to I think about 19%, anything less than 20%, right, in your mortgage, right, you have the opportunity of paying 10% of the mortgage principal. So what I mean by that is if your mortgage was maybe 400,000, but you are borrowing 350 from the bank, you paid 50K, right? So 50K for 400,000 is less than 20%. So you're going to be paying, you have the opportunity of paying a prepayment lump sum payment of 10% of the loan. That would be 10% of 350. So if you had a house of 400, you pay 50K. That means you are borrowing 350 from the bank. So you have the opportunity of paying a lump sum payment of 10% of 350. And the reason why it's 10% is because you didn't pay up to 20% of the cost of that house. So 20% will be 80,000 and above. Because you paid only 50K and it's less than 80K, then you have the opportunity of paying up to 10% of the mortgage principal loan. So that's 10% of 350,000. So every year you have the opportunity of paying 35,000 lump sum payment. You can decide to pay this lump sum payment at once or spread it out. Maybe 3,000, 10,000, 30K now, 5K now, 10K now, 10K, 10K, 5K, that kind of thing. But you cannot go past 10% of that what you might call is of the mortgage principal, right? So if you were paying 20% and above, then you have the opportunity of paying up to 20% mortgage prepayment lump sum payment. So you can make a lump sum payment, but it is tagged a prepayment plan, right? So and that prepayment is within the range of 10 to 20%, depending on how much your down payment is. It's 10% if your down payment is less than 20%, and it is 20% if your down payment is 20% and above. So that's the third way that you can try to pay off your mortgage faster. So you see that once you start paying off your mortgage, the amount owing reduces, the number of the length of time to complete it also shortens, the amount you're owing reduces, and then the interest rate also declines because all these payments are going into your principal, right? That's another thing I have to mention, right? So if you're doing your monthly payments, your regular monthly payments, your regular structured plan, whether it's bi-weekly or monthly, a percentage goes into interest and a percentage goes into principal. At the initial stage, bulk of it is going into the interest, but as you keep paying more and more payments, then it evens out and eventually more goes into the principal, right? But the caveat with that is about the time you are starting, that more is starting to go into the principal. For some people, it's almost the end of that period. So, like for example, if you had a plan for 4 years, and by year 2 or 3, that's when more is going into your principal, as opposed to the onset when more was going into the interest. Then you realize that the mortgage is almost over, like that 4 year period is almost over, 5 year or 3 years, the case may be. You have to go into another contract, start afresh, and more again goes into the interest as opposed to the principal. So you don't want that. You want your money to be working for you in terms of paying down your debts quickly and faster, right? So if you're doing bi-weekly, then you have you have a higher tendency to paying off your loan faster, and so bulk of the money starts going into your principal. If you increase the amount you're paying, also bulk of it starts going to the principal. If you do a prepayment plan, that's your lump sum payments within the available window you are given, that's 10 or 20%, everything goes into your principal, nothing goes into the interest. Then if you can also double your payment, so if you're paying 1,000 every month, you decide that okay, for the next 6 months I want to double my payment and be paying 2,000 every month. So the 1,000, that is your ideal structure. Part of it goes into principal, part of it goes into interest. But when you're doubling in the extra 1,000, everything goes into your principal, right? So those are ways you can pay off your mortgage faster and quicker. Why would you want to pay off your mortgage quicker and faster? Because you want to be debt free, because you want to have full ownership faster, because the more the higher like you're owing the bank or you're owing your lender, the higher the tendency that that home doesn't belong to you, because in the case of anything happening, then the lender has more claim to that house than you. So it hastens the process of you having full ownership of your own. It reduces the interest you'll be paying, right? And it makes you debt free. There are some disadvantages. Some people say that houses that are paid faster are more susceptible to scam. I don't really know much about that, because from my research, right, it varies, because there are even people who haven't even paid off their full mortgage and their house is predisposed to um theft and all that, stolen identity. The key with that is to protect your identity, whether you're owing some amount on your mortgage or not. Always make sure you protect your identity, and when you think that there has been like an access to like your identity, your location, and you feel like your identity might be threatened, then you report to the appropriate authorities. You report to the credit bureau, you report to the cops, just so that extra caution can be taken as pertains things that require your identity, right? So I would say that's not a major con, right? I mean, it's important, but you can't put your life on hold because of that. With the right caution, then you can avoid that. The other thing is you might be um waiting off other things you could have used that money for. So the process of paying off your mortgage, then those money could have been put into other use, like an investment with a higher return, right? Typically most mortgage rates are not as high as like other loans, right? Like credit card loans, the interest on them are more way higher than the interest rate of mortgages. Like credit cards are like 25% and above. Mortgages are within like 1% to 5% typically, right? Like just as an average, right? So you could have used that money also to pay all that debts, right? Like your credit card payments. So advisably, before you start diverting money intensely into paying down your mortgage, then you should take advantage of paying off other loans and debts that have a higher interest rate, right? You could still assign some into your mortgage, so that's not that it's just there and it's only your monthly payments, but let bulk of it go into loans where you have higher interest, right? There's also the disadvantage of like the investment, like I mentioned, right? So you may miss out on all those opportunities. Another thing where you can use to avoid that is by diversifying the extra funds you have. So you put some into your mortgage plan and then you invest some. So that's the way of avoiding that, right? Where can you get all this money from? From your income, right? You budget your income. When you make income, you budget it. Passive income, that means you have to have more than one source of income, multiple streams of income, right? Investment return. So if you have investment, whenever they yield you dividends or you make a gain off it, like a profit, then you can divert it into paying your mortgage at no interest. Like take advantage of opportunities of mortgage payments that are void of interest or minimum or have minimum interest. Always ensure also that you're checking with your lender that you're not going to be incurring an additional cost, because then it's counterproductive, it's of no use, right? So those are like ways of which you can pay off your mortgage faster, certain pros, cons, and how to mitigate against some of those cons, right? So I hope that this has been quite educative. If you have any question, please drop it in the comment section. If you have more things to share, do let me know. Thank you and have a good day.